All right, everyone, here we are with ticker symbol Nndm, Nano Dimensions. And before we start with this chart, I want to go ahead and say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back. And let's jump into this chart. So this chart here is showing us how Nano has been in an upward trend. I mean, it's been fighting. I mean, the volatility is there, ups and downs. It's been fighting to stay above the 50-day moving average. It continues to work its way up. And right now, we're hitting new resistance levels and we're hitting newer highs where we've broken through all the recent most important resistance levels as this was going down, which was around the $4 mark. And we're above them. And the highest one was 460. We're in the 481 range. We hit newer highs. And also, we now are on our way to the point where the bulls need to fight hard and break through the highest point that they reached in the bullish run before this became bearish and before this started to work its way back up. So $6 is the highest point that the bulls have hit. That's their goal now. That's the point of reference that is very important for the next coming days and weeks. As of right now, the bulls want to break through the resistance levels that we're looking at, but I want every single investor to be aware that $6 is probably one of the most important resistance levels, and once that's broken, this could be on its way to newer highs as long as the bulls can turn that into a support and don't get rejected. Now, we're going to look at this closely. I'm going to move this to their new locations, our new resistance, our new supports. But I also want us to pay close attention to some other numbers here on the chart. And we're going to look at them in just a moment. So let's go ahead and move our resistance. I'm going to put this based off the second highest point reached today before it fell. And also a little bit above this recovery. So this is the highest point before it started to fall. And then before this recovery. Now I'm going to look at this based off of its lowest point, but before I move this, I want every single investor to write this down. If you have it written down from yesterday, keep it in mind. And if you're a first-time viewer, I would highly suggest writing this down. 432 is right now one of the first support levels below the 50-day moving average. So super important to keep that number in mind. And it was yesterday's lowest point after this bullish run. So this is a very important support level if this was to go in that direction. Now, let's go ahead and move this to our lowest point for today and see what the chart is saying here. So the 50-day moving average, super important, 439. As long as we're above it, the bulls are in control. The moment we're below it, the bears are in control. What's the highest point that the bulls reached today? They reached up to 494. I want every single investor to write that down. That's a very important resistance level for the bulls to reach newer highs and move further away from the 50-day moving average. Now, the bulls have to break through this resistance, which we're going to talk about in just a moment, to continue the momentum and stay above the 50-day moving average. Very, very important for the bulls. If they don't accomplish that, this 50-day moving average, as you can see, is working its way up fairly quickly and can catch up to the price. So we're going to see how important it is and what our resistance level is. So our resistance level is 491. The bulls need to break through this. I want to emphasize this. The bulls have to break through 491, turn that into a support to reach newer highs and work its way up to newer resistance levels and pull further away from the 50-day moving average in an upward direction. This is important and I want to emphasize it because this will catch up to the price. And I'm going to say excuse me and I apologize for my terrible drawing, but just to show you guys a quick scenario and illustration of what could happen. Let's say that they miss it, or even if they break through it slightly, but they end up below it again, this 50-day moving average will catch up to the price and break through it. End up above the price is below it, and now we're in bearish territory, giving control and leverage to the bears to bring it down. So you want to keep that in mind, why it's so important for this resistance level to be broken through. Well, it's so that the bulls can actually continue this run, continue this momentum, and get further away from the 50-day moving average in an upward direction. Once again, the emphasis is there, and that point of reference is our first resistance level that needs to be broken through, and that's 491. Now, on the other hand, we have what the bears want. The bears want to break through this support, right? They want to get closer to the 50-day moving average, and they want to actually get back into bearish territory. Well, the first support level here is 460. I want to emphasize to all investors, you still have some room to pay close attention to how the stock is reacting between 439 and 460 in bullish territory, but I would really suggest paying very close attention to the behavior of this stock. How quickly is it moving to newer lows? How quickly is it actually working its way down? Or are the bulls even trying to reappear within this area and bring it back up? Now, I do want to emphasize that if the bears accomplish breaking through the 50-day moving average, it does not signify that they won. It means that they've gained leverage, but the tug of war can start and the bulls can reappear, take advantage of the price, and bring it back up. Now, it's just going to be a lot harder for the bulls to maintain momentum for the coming days and actually break through such resistance levels as of the one that we show right here today of 491 for tomorrow. But the bulls can bring this back up. Now, you still want to pay close attention, though, to how the stock is reacting between 460 and obviously 439, which is our 50-day moving average. And that's why also yesterday's lowest point is very important, because that way you can pay close attention to how the stock's reacting between that support level and the 50-day moving average to see if the bulls have a chance to reappear, or are the bears truly dominating this one and pulling it down to newer lows. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video. In that video, I will be discussing about the S&P 500 index and how it's been rising several points on scheduled dates. And on these scheduled dates, the S&P 500 index is rising due to the fact that the Federal Reserve is pumping the markets. What does that mean for us as investors? Well, if the S&P 500 index is rising, there's individual ticker symbols rising up with it. They're rising up anywhere from 30 cents to $3 per share, sometimes even more. Obviously, you have to do your due diligence and research, but I know that per share, it may not sound like a lot, but that does add up per share. I mean, keep in mind, 30 cents to $3 per share does add up. I know that I always say profits are profits, and if you put $1 into the market and you got back $2, you've done a great job. And that's what this is all about here, so that we can all learn and grow together, and also so that I can inform every single investor and viewer on the great news that there is an opportunity to maximize profits. Now, I'm not guaranteeing you profits in the video. I'm not telling you to buy, sell, or hold anything in particular. I'm just analyzing the S&P 500 index and putting the dates and the charts side by side so you can see for yourself that they speak for themselves. Literally, it's showing it in the charts, and on the specific dates you could see it. And if it's rising up, there's individual ticker symbols within it rising up. So you have to do your due diligence, as I stated, and research. But it is an opportunity, whether the market's going up or the market's going down, to maximize profits and minimize losses. Now, again, I'm not there to guarantee you profits. I'm not there to tell you to buy, sell, or hold anything in particular. I'm just here to enlighten every single viewer and investor on the great news that there is an opportunity to maximize profits and minimize losses. Check out the video. I wouldn't want you guys to overlook it. I just did the most updated one for this week, and you'll see in the chart what I explained, and then look at the S&P 500 index today, how it reacted, and you will see everything that I talked about is in that video. It's very informative and helpful. I wouldn't want you guys to miss it. It's super good information for every single investor to be better equipped weekly. It's a weekly series that I do, so stay tuned for more as long as the Federal Reserve continues to pump the markets. Thank you guys so much for watching, and let's make some money.